going. You sure? Yeah.
I've looked at the reserves. I've seen its structure. This is a shell filled with commercial paper and treasury bills and has very few dollars actually backing it. This is Rafi from the Endgame Investor, and today we're going to talk about Tether. Tether, my friends, is going down. It's just a matter of time. I've looked at the assets backing this supposed stable coin, and there are very few cash dollars actually backing the fund, or whatever you want to call it. Ever since Terra USD collapsed, Tether's market cap has been shrinking in a stair step as investors in Tether have been redeeming their tokens for US dollars. The question is, how does Tether actually get US dollars when an investor redeems its tokens for US dollars? And I'm going to show you exactly what happens, and then explain why it's not sustainable, why this thing is going down, why it's tied to the bond market and the commercial paper market and the money market. This is not going to last. And Bitcoin ties itself to Tether because Tether is inflated in order to bid up the Bitcoin price. So when Tether falls and Bitcoin falls, the treasuries fall, everything falls at the same time. Everything is tied to the same boat. Everything is tied to the same anvil, and it's going down. Let's get into it. The first thing I want to show you here is an article from CNBC, that paragon of financial virtue. This is my favorite paper.
This baby is off the charts. Why? A sarcasm detector. Oh, that's a really useful invention.
But anyway, some of the articles can be useful. Regulators are getting nervous about stablecoins after Terra's stunning collapse. Oh, poor regulators, they're getting nervous. They're looking out for our best interests, and they're quaking in their boots, worrying about how they're going to keep our financial health intact while they battle the evil stablecoins. Not exactly, that's not what's going on here, but I don't trust the regulators. I don't trust the stablecoins. They're all in bed together. They're all in some kind of inappropriate reproductive position.
One more, I got 69 touchdowns, if you know what I mean.
Anyway, we have a subtitle here explaining why the poor regulators, why they can't sleep at night, and they're breaking out in cold sweats, worried about the financial health of the peasants of their country, as they should be, because they are saints with halos around their butts. Why are regulators worried, says the subtitle. The main fear is that they're terrified. The main fear is that a major stablecoin issuer like Tether could be next to experience a run on the bank. Let's skip the next paragraph because I don't really care about Yellen. Previously, Tether said its reserves consisted entirely of dollars, but it reversed this position after a 2019 settlement with the New York Attorney General. Disclosures from the firm revealed it had very little cash, but lots of unidentified commercial paper. We're going to get into exactly what that is in a minute. Tether now says it is reducing the level of commercial paper. Oh, that's great. That sounds like it's stabilizing, right? Reducing the level of commercial paper it owns and increasing what? Its holdings of US Treasury bills, not dollars, Treasury bills. It is tying itself into the Treasury market, and we're going to see exactly how much in a minute. But anyway, this is Tether's market cap. This around here, where you see this wobbling, where this stair step starts, is where investors in Tether are redeeming their Tether for US dollars. So every time you see a stair step down, you have a big player that is redeeming Tethers for dollars and getting out of the fund. In total, the redemption of Tether into US dollars has been from a market cap of around 83 billion to now 75.6 billion. So what is that?
That comes to $4.3 billion.
So 8 billion of Tether have been redeemed into US dollars. Now, exactly what is being redeemed? For that, we got to go to this tab, Transparency. Now here in the Transparency tab of the Tether website, it says, Transparency, all Tether tokens are backed 100% by Tether's reserves. The value of our reserves is published daily and updated at least once per day. So this is updated. Reserves breakdown. What is backing a Tether? You have 6.38% other investments, including digital other crypto stuff. That's a circle jerk. Secured loans, 5.27%, none to affiliated entities. Okay, so that's decent. 5.27% secured loans. They have collateral, these loans. These are secured. Doesn't mean they're 100% safe, but they are relatively safe. 4.61% corporate bonds, funds, and precious metals. Oh, so there is some gold and silver backing a Tether. It won't go to zero. Okay, fine, it won't go to zero, but what will it go to? 83.74% cash and cash equivalents and other short-term deposits in commercial paper. Cash and cash equivalents and other short-term deposits in commercial paper breakdown. 52.41% treasury bills. This is short-term government bonds up to, I believe, 1 year. The bills category is from 1 month to 1 year, and that is half of the 83%. So it's about 42% of all of Tether is treasury bills. Now, cash and bank deposits. This is the closest to actual cash that is actually backing Tether, 6.36%. That's it. Commercial paper and certificates of deposit. Commercial paper, you have to understand what commercial paper is. We'll get to that in a second. And you have 4.5% money market funds. Money market funds, what do they invest in? Money market funds invest in commercial paper. So they're 4.5% invested in funds that invest in commercial paper, while they themselves are invested in commercial paper. So the two biggest components of Tether are treasury bills and commercial paper. Now let's go to what is commercial paper. Commercial paper is basically a company that has to meet payroll, that wants to free up some cash to invest in somewhere else with higher return, and it gives a middleman a little bit of interest on its notes to fund, let's say, payroll, and it's an efficient way to finance short term because you don't have to go through the SEC. Anyway, what happened to commercial paper in the financial crisis in 2008? The commercial paper market froze, and firms were no longer able to access easy and affordable funding. Another effect of the commercial paper market freezing was some money market funds, especially investors in commercial paper, breaking the buck. And what is Tether invested in besides commercial paper? Money market funds. In 2008, the Fed embarked on something we all know now as QE1, or quantitative easing. It wasn't known as QE1 then, it was just known as QE. Just like World War I was not known as World War I until World War II happened. Until then, it was known as the Great War. So it was just QE. And what was QE before it was QE1? What did it consist of? Treasuries? No. It was commercial paper. That was the market that was freezing up. And when commercial paper freezes up, that means payroll can't be made, which means that people don't get paid their paychecks and everything starts to fall. Here is the Fed's balance sheet, not the entire thing, but U.S. Treasury securities. This is around the era of QE1, when treasuries were $713 billion, and they actually went down to around 475 billion, 474 billion. There's a trough here. So what was all that stuff that was being accumulated on the balance sheet in QE1? That was commercial paper, not treasuries. Why were they acquiring commercial paper? Because if they didn't, then there would be a cascade domino effect of defaulting payrolls and nobody would have gotten paid. And you'd have this massive deflationary forced tsunami that would probably collapse the entire banking system. If we go back to Tether's market cap here, we have $8 billion in redemptions. What is being sold in order to meet those redemptions for US dollars? It is treasury bills and commercial paper being sold. The danger for Tether is that if too many people try to redeem their Tether in too short a time, as in if a panic is ensuing, then the fund will have to sell its treasury bills and its commercial paper very fast, and it probably won't get par prices for them. And you could end up with a cascade in the commercial paper market and the treasury market. Tether's market cap right now is $75.7 billion or so. As the Fed increases interest rates, especially the overnight federal funds rate, it is the short end of the curve that gets affected the most. And the amount of money that those T-bills are worth falls sharply, because as rates rise, the price of those bonds fall. And so you could say that Tether can just hold those T-bills to maturity, and that is true, they could, and get par back. However, if too many people want their dollars from their Tether in too short of time, they're going to have to sell these treasury bills before they mature, especially if some of them are up to 1 year. I mean, we don't know the breakdown of that, but they could be anywhere up to 1 month to 1 year maturities. And so if they have to sell them at a loss as the Fed is raising rates, then they won't be able to pay back these investors at par, and the value of Tether will fall. And if the value of Tether falls, if Bitcoin is tied to Tether, as we suspect that the price of Bitcoin is bid up with unbacked Tether, then Bitcoin falls with it. And since part of Tether's backing is Bitcoin itself, as it owns some cryptocurrencies, then you have another circle here. And so we have a situation where the bond market, the T-bill market, is tied to the Bitcoin market, is tied to the Tether market, is tied to the commercial paper market, is tied to the money market, which itself invests in commercial paper. So at some point, it's all going to fall together.
Let's keep going. You sure? Yeah.
This is Rafi of the Endgame Investor. If you like this video, then subscribe to a 2-week free trial of the Endgame Investor, where I cover issues like this and also see how I am trading these currently crazy markets. Or if you would like, you can become my patron on Patreon, where you will get a weekly video on biblical commentary along the lines of monetary and financial topics. That was said a little bit awkwardly, but you know, I try to change it up every now and then.